Hey, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all. We are heading into a new week. We are heading into our second weekly options expiry of January, and we are heading into this colossal January 17th OPEX. We're going to talk today about why this upcoming OPEX is particularly important a bit. I'm going to be developing this idea as we head into it, and thinking about some of the components perhaps that may play into determining our price action heading out of that OPEX. That's something I want to focus on not only this week, but going into next week. But I want to start thinking about it now because the moves that we see develop over these next, I suppose it will be 9 trading days, since Thursday is this unexpected closure and day of mourning for the late President Jimmy Carter. So it's going to be important for us to think about this and consider this and say, okay, maybe what are some holes we may be able to punch, or what are the signs we want to look for that may give us some inclination as to whether our continued bull trend that we've seen develop since the end of October, whether that's going to continue into another several month period. Now, it's possible that with this meme, let's say, the time you cover meme, there may be some hinting, there's some speculation that perhaps Roaring Kitty is talking about, a January 9th to April 20th kind of bracket for a run for the stock. Maybe that's the case, right? I mean, in order to investigate that, we would have to look at what the contingent, well, I should say not contingent, well, to a certain extent contingent, but component factors of the price action, not only during the sneeze itself, the massive upward volatility in late January of 2021, but also what drove the repeated recurrences, high volatility and big swings in price action in February, in March, and in April of 2021, right? There was a lot of price movement here and a lot of opportunities for people to generate some outsized returns based on those price movements. So will this requel be something like that first initial explosive event we saw in January, or will it be something perhaps similar, but that develops into a number of periodizations, that develops into something that looks like that kind of cyclical, maybe settlement, liquidity, volatility kind of alternation that we saw occurring a lot in that period? Hard to say at this point, but this is what we'll be thinking about over the next couple weeks. But for today, right, in today's article, I don't speculate too much. I don't go into too much detail into some of these deeper mechanical elements that I've been thinking about. But on this epiphany, I wanted to consider what looks to me perhaps like it may be a sign that we are approaching something of an upside reversal sort of cycle. Now, within our trend, while we remain within our trend, we are looking at lower volatility levels. So throughout the early portion of this trend, we've seen volatility spike as high as 150%. Right? When we see volatility get up that high, that screams to the general market, sell options, right? Sell short calls, sell short puts, both, right, in both directions. Right, options premiums get very, very expensive when we see IV go up that high. In fact, it's likely part of the reason why our upcoming January OPEX has so many contracts is because of our huge outsized volatility increases that we saw in May and June, with IV spiking up into the 300s, like 350%. Values we've not seen since 2021 and some parts of 2022. I don't even think we got that high in 2022. So, right, what this means is traders saw this, took the opportunity and said, whoa, it does not matter what the price is. I am selling options for 6 months out. Just throw them 6 months out, because what are the odds that IV is going to stay at these crazy levels for more than a few weeks? And generally, traders who did that made quite a bit of money, whether it was a put or it was a call that was being shorted. by an options trader, you know, those are bringing home some hefty returns. And we have been seeing this IV drawdown, right? So even though at the beginning of yesterday's trading, as we can see here, at the beginning of yesterday's trading, or I should say, excuse me, Friday's trading, we did get some of this play, as I outlined in the live stream on Friday. We did get some of this play in the gamma ramp. So we saw some of these gamma ramp dynamics exploited, right? So in the beginning, come out very tight range, very low volume, low volatility, explodes up, right, very quickly, span of a few minutes, up through progressively some call gamma accumulations. What I suspect this was, I suspect that this was primarily driven by Thursday shorts who entered, closing their positions on Friday. So we didn't really get a major options move following this, even though we had plenty of opportunity to get carried through this $32 high call gamma accumulation level. We just didn't. We didn't really move up through that level. We could have seen, if there were some ETF activity happening, you know, that could have pushed us up, right? We just didn't see any of those factors, right? This price pattern says, okay, this is some play in the options market. This is some day trading in the options market, you know, kind of moving the price on some of these broader kind of U-shaped dips. But otherwise, what we're looking at here, this kind of bleed off tells me, okay, this is just what kind of neutral range bound trading in a pretty steep negative charm environment looks like. So charm is delta decay over time. As we approach options expiries, charm will take a particularly strong effect heading into the second half of the day, where those contracts, those options contracts on GameStop, it's going to be primarily calls that are out of the money, are in a negative charm environment. It means their deltas are going to decay over time and allow market makers to sell delta hedges, which are ordinarily held in the form of shares, of long shares, right? So a market maker will hedge the negative deltas of a short call with long shares, the positive deltas of long shares, and in so doing remain delta neutral in order to guarantee the stability of their profitability model according to their dealer strategies, their options dealer strategies. So we had a lot of open interest, especially calls at $32, at $33, kind of just proximately out of the money, that earlier in the day would have retained a significant amount of their delta value, especially based on this price action that very quickly shot these options contracts much closer to being in the money, very briefly in terms of the 32s into the money. So this basically would have seen, targeting the 32s. I imagine this was something of a move that targeted rapid gamma hedging, rapid delta appreciation on those $32 contracts, right? So somebody who went into these shorts, as we saw on Thursday, probably planned to close them out at the point where it would be most beneficial for them. Maybe they picked up long calls late in the day on Friday, or did so early, probably early in this period. That's why we see this kind of bland period early. And we probably saw something like whoever this fund was picking up long calls like off of this, kind of establishing their positions, just kind of vacuuming up out of the money calls, and then whoop, just shoot that up and then sell them along with some short calls into here. Let all that bleed out as charm takes the price down for you, right? Otherwise, not very much activity. Pretty low volume on the day in the mid 7 millions. As I mentioned, right, part of what is dragging down our implied volatility here is the fact that we just don't have that much. We're looking at, in the past 7 or so weeks, this is about the lowest we've seen volume get. We've had individual days. We've had days in, say, the 5.5 millions in that range. But as far as a 3-day period is concerned and a 5-day period is concerned, we are approaching lows in terms of volume. We're at lows in terms of volume. So the last 3 trading days of last week and the whole week, the week as a whole, the past 5 days. So that would be the 4 trading days of last week and 1 from the week prior. were, in terms of average volume, the lowest we've seen throughout this entire bull trend, which began at the end of October. So when we see that type of price action, that's going to cause a decrease in implied volatility and the appreciation of options contract premiums that go along with that. Now, we're still at relatively middle of the road implied volatility for GameStop. We're not looking at levels like we saw back in, say, September and early October, which got below 70%. Now, on an ordinary stock, right, 70% implied volatility is like historic highs, something like that. For GameStop, basically in the past 4 or 5 years, 5 years, I'd say, that's uncommonly low. We're not quite to those levels. I think we're about 104, 102 or 104%, something like that. Which, okay, why is that important? Why is that interesting to take into account? As we approach a big OPEX, this may form up to signal something like an IV cycle, right? So part of the reason that I knew, for example, why I made the decision back in October to enter into long calls, why it looked to me like, okay, sometime in the near future, like even a small price movement seems like it's to the upside, seems like it's going to occur in GameStop, aside from the technical stuff, right? But even just looking at IV, yes, the technicals look nice, but the IV as well, because it had gotten to those lows, it made it such that taking a long bet in terms of a call, right? Taking a long call bet, in the money or at the money, I like I said, I am very risk averse. This is not trade advice. This is not financial advice. I do not recommend trading long calls. I mean, again, I don't provide advice, but I myself do not trade long calls with high frequency. Despite the potential for outsized returns, it's very easy to get these wrong. They are not structured in the favor of the buyer. They are structured in the favor of the dealer, and they only really work out with those kind of spectacular results you're looking at in very, very restricted special circumstances. So when I saw IV get to those levels, that signaled to me, okay, these are yearly lows. It may have been like 2-year lows on GameStop IV. There's a pretty good chance at that point that some form, even if it's not a crazy form of upside reversal, is likely in the cards in the next couple months or so, in the next month or two, like, right? Because even if you get a small reversal up into like from whatever it was, like 69 or 68%, up to like 90 or 100, which very doable for GameStop in a short period of time, as we saw happen, that bet can really pay off quite substantially. So while I'm not saying that those types of conditions are facing us now, not exactly as we saw them in October, we are approaching within our trend relative IV lows. In fact, we've not seen IV values this low since October 8th. We saw this bottom was slightly lower than this, I think just below 100%, maybe around 95. And back on December 13th. So after that kind of cool off from the Q3 earnings report, we also hit an IV low in the mid 90s. So we're approaching that. And I would say there's a good chance for something like an upside reversal into January OPEX if what we see this week is continued depreciation of our IV levels. If we see sideways trading, and this is what I say in the article, I think likely our most likely moves, let's blow this up a bit. Our most likely moves heading into this week, based on what I'm seeing in our technicals, we're right in the middle here. Let's go to the chart first here. Right, so we had this chance in the middle here to find support in the middle of our macro bull channel. We've kind of found it in this sub-regression channel. It didn't really serve as support. We dipped below that pretty hard with this shorting that came in on Thursday. We reversed back to the midline of this channel per the end of the week on that move I just highlighted earlier. Where we are in terms of this channel, okay, we're slightly to the downside. We're still toward the top here. I think something like a move, right? A move in this blue channel, right? We could move up here over the next couple days, maybe to like 33.50, and then kind of reverse back to where we are, something like that. We could honestly just kind of continue down here for 2 days, go back to kind of 30.50 before then moving back kind of listly to the upside, listfully, listingly, slowly, lazily, something like that, in a way that would continue to bleed IV. I mean, hey, maybe there's something, again, without taking into account stuff like, I don't know, whatever's going on with ETFs. Maybe, we get something in the broader market like SPY and like small mid caps continue, like move back over this kind of, we're in this sort of uncertainty range in the broader market, especially with SPY, where, we're below this 6,000 call wall, like the 6,000 level in SPX, 600 in SPY, or like 599 or whatever it was. In SPY has served as a pretty strong support for a while in this bull trend. And then after the, what was this? The Fed meeting, I think this was back on, I think this was December 12th, something like that. Does that sound right? December 12th, I think it was a Thursday. Right in here. SPY fell off a ledge and then went all the way down to 579, right? Broke through that volatility trigger. I guess it wasn't a call wall. Call wall was at 6,100 SPX, so like 610 SPY. I guess 6,000 was the volatility trigger. So we moved into a pretty net gamma negative, net negative GEX environment. So negative gamma exposure, primarily put dominant, which is more volatile. And just ran that kind of ramp. Now we ran back up it. We kind of recovered in SPY quite a bit, but if we recover kind of back over that and we resume this kind of bullish trend, we may see ETF buying. We may see more sort of net flows into ETFs that look like what Triple Witching did back on 12/20. So maybe we see that type of ETF buying at some point if we see those broader conditions. I don't know. I don't know that data super well. I don't know those dynamics super well, but it's possible we see something like that kind of go in the background that then maybe introduces a little bit more play, a little broader kind of range within our channel here into this week and early next week. But what I'm looking out for, and what I think would likely gesture to something like some more upward, or I should say upside volatility into January OPEX is if we get something kind of flat over the next 4 days. If we get kind of flat, we just sort of dance around in this area. I would expect IV to go down sub 100 by the end of the week, especially if volatility or volume stays low. If we stay kind of averaging around 7.5 million shares, maybe even go lower than that, we may see one of those two scenarios develop. Now that could prove to be, a good opportunity if that is indeed right. So I'm not looking at this as like, oh man, I gotta go buy my long call. No, not necessarily, but I would take this as like, okay, let me see if I can find some other signs here. Does this gesture toward institutions setting up for volatility into and out of, I should say, upside volatility into and out of January 17th? And that's what I'm really thinking about here is what are we going to look like coming out of January 17th? So we did have a lot of our OI from last Friday roll into this week. So I think especially call OI. So I do think there were a fair number of people who saw that gamma ramp dynamic that I spoke about last week that didn't end up playing out, right? We did have this potential midweek to run up to the 34-35 area to the top of the macro bull channel when we were testing support at the midline of that bull channel. So that average 7-week 4-hour candle closing time or closing price. And it just didn't happen. So I think there were a lot of calls maybe that got rolled into this week to see if maybe something like that would play out again. We don't quite have that structure in place if we go down. We're still looking at $30 max pain. We're still looking at right? Our OI going into Jan 17 is so thick at some of these key strikes. So like $30, even up through this range, 32, 33 is pretty big. 35, we still have this familiar bracket, whereas a lot of in the money stuff has been kind of gradually coming off the board. That's allowed Max Payne to move up a bit, right, from 20 to about 22. We'll see if that continues to move up maybe this week, especially if we get something like an up move. But Max Payne's still sitting pretty at $30, moving up for this week, moving up from $29.50 last Friday to $30 today. So we like to see that. You know, a lot of negative GEX coming off the board, gamma exposure, as a lot of puts just weren't re-upped for this week, right? They came off the board. They were put on the board late last week to take advantage of some of that shorting activity, and they just weren't re-upped for this week. They weren't rolled. As we look at our gamma exposure here, our sort of market maker hedging here, we still see this familiar structure. We can see how it's denegitized. We don't have a single strike that's even a little bit net put gamma that has net put gamma exposure. Right, so we're still seeing that kind of light but still positive dynamic at 31, or I should say call gamma positive dynamic at 31, 31.50. 32, 33 still very strong positions right in the middle of our range. If we move into the middle of this, we'll again do what we did early in the week, which is kind of ping pong in there, kind of get a pin in the middle of that range until something like an external factor like we saw with that shorting yoinks us out of there, and then we can, you know, we might play around up here a bit. Without a pretty major bullish kind of background effect, I'm not seeing much. I'm not seeing movement into this 33 to 35 area too far, because we did have a lot of call gamma come off the board in here. We have really neutralized in this range. It can come on the board, and then we can get something like a bullish event that kind of pushes us up. Kind of difficult to forecast an option-specific movement that would bring that about this early in the week, but you know, obviously I monitor this every day to see what that looks like. So this is why that kind of this sort of supports this technical projection of, okay, you know, maybe we move into here, kind of test this area a bit, but then move back down, or maybe we kind of early move to test 32, but we don't really mount that level, and then sort of late week we kind of bleed down here for something like a lower close. You know, this range, because of how much call gamma we have at 30 and 35, you know, we're not really looking at any kind of critical instability right now outside of that range, at least not for this week. But of course, a lot of the force, a lot of the strength and the volatility suppression at these levels that we see and that we've seen recently is coming from January OPEX, right? So if we scroll back up to our OI data, we're not seeing, for this week, like the 30 OI is not very large. It's not even 4,000 contracts, right? So it's about equal, and it's slightly larger than puts. But if we were just going off of this week, like if next week didn't exist, $30 would not be altogether that supportive of a position. 35 would still be pretty supportive or resistant as an overhead because we have almost 10,000 contracts there. But 30 maybe not so much, right? 32 would be the stronger level at almost 6,000 contracts with very little put OI at that spot. So what'll be interesting will be to see how, let's say, what it'll be like 124 OI develops, maybe what February OPEX starts to look like, starts to have shape given to it. But we have so much of what's determining our current stability is all of this OI that's been accumulating for months and months at at January OPEX. And as soon as it goes, right, these 30,000 calls, they've already started to come off the board, interestingly. But there were 30,000 calls, 29,000 calls at $30. When those are gone, then what's going to determine our gamma hedging environment is whatever we have set up for those last couple. So it'd be the 24th of January, the 31st of January, and February 7th, I guess, would be our first February expiry. Those are going to start to have an effect on our price. Now, it does look like early enough. We do have the contracts that are established there are more or less do mirror our current pattern, but without that huge amount of January open interest, it does raise a question of where are we going to go after January 17th. So what happens this week and next week, right? What sort of events we see play out, how our price movement gets determined, whether we get something like, is January 13th, for example, is this going to be a kind of major requel date like it was all the way back in 2021, right? We talked in the live stream. I've talked about this in several posts. Shortly after Ryan Cohen joined the board, I mean, there was a bullish reaction to him joining the board. This would have been, he announced it on the 10th of January, and this would have been assessed in price action on the 11th. We did see some, but by and large, it wasn't until the 13th that we saw that crazy exponential move where GameStop went from like $5 to $11 in a single day, right? 120% move in a single day, which the following day was topped by like, another 50 or 60% move. So that looks to have been necessarily related to maybe overlapping windows of settlement and Rec 68 margin call extensions kind of lining up and then just blowing up the January OPEX chain, right? I'm pretty sure January, I'm trying to think when January OPEX was then. I think it was the following week. So I think it was like the 21st, the 22nd, something like that. And it ended up maxing out the options chain. So there was a lot of accumulated options there because of all of this hype from the fall, all of this excitement, kind of like what we're seeing now. It'll just be interesting to see, are we going to get something like that? Is there something like a market mechanical catalyst kind of brewing in the background? Probably something like, I've heard some people mention this. I have to dig into this a bit myself, but, if like liquidity dries up, like if people can't get a hold of shares, we have seen official shares to borrow kind of dwindle. We do see that, XRT is on reg show. Don't know what that means as far as creation and redemption are concerned. But if we can see some of these sources where GameStop failed to deliver shares and synthetic shares are kind of tapped in order to cover these failed to delivers, if that liquidity can dry up, if that source of synthetic shares dries up, then what we might see is clearing requirements, enforcement of, hey, whatever market participant, whatever you're doing, you got to deliver these shares now. There's no liquidity for you to get this in terms of synthetic shares, so you got to go to the market and pick it up. And that might cause, the options chain to really blow up. That's the sort of circumstances we saw sort of emerge heading into the 2021 huge upward volatility. Maybe we see something like that, this year. Maybe we see something like that now. We definitely have some of the components for that. There's been a lot of excitement about what we've been seeing. We've seen the right type of price action heading into the end of the year. It's going to determine, right? All of the pieces have to move into place. So I'm going to be thinking about that, especially. That's where mine's going to be over the next couple of days, especially this week, heading into next week, and what we might be able to expect, and whether any of that is detectable from our options data. That is definitely what's going to be on my mind. So that brings us to a close for today. Thanks everyone for watching and listening. If you are new, if you've not had the chance to check out any of my articles lately, I post daily GameStop technical and options analyses to my X page. If you're watching this on YouTube, you can find the article linked in the bottom in the description. If you are watching this perhaps on X, you can find it pinned at the top of the page. So thanks very much again. We'll see what plays out today, and we'll see you guys tomorrow before market open. So thanks very much. Take care.